Hello, Lomita. It's the end of July. I hope everyone had a great Independence Day. Now, the real estate market is changing, so hang out a few minutes and find out what that means for you and how you can protect yourself or make the most of the changes. Home values here in Lomita are still going up, but at a slower pace than we're kind of used to. The median home value in Lomita right now is $981,000. That's up 3.31% over the last month. It's up 3.06% over the last quarter and up 15.62% over the last 12 months. It's up 30.79% over the last 2 years, and it's up 36.98% over the last 36 months. Now, forecasted home price growth is predicted to be on average about 8.5% this year, instead of the 15.62% we had over the last year. So yes, slower, but still going up. Now in comparison, the median home value in Los Angeles is $879,000. In California, it's $795,000. And for the entire country, it's $344,000. If you want to find out what your home's worth right now, go to housesinsouthbay.com and get an accurate valuation. Hello everyone, Steve Huda here from Century 21 Union and housesinsouthbay.com, bringing you the Lomita Real Estate Market Report for July 2022. Now, remember to like and subscribe and especially share if you find this of value. And please comment below about what you think is going to happen in the market in the next 6 months, or what concerns you the most. It really helps me make relevant content. So, we are noticing a slowdown in what we hope is a return to a normal market. If you've been thinking of selling, this still may be a great time for you. There's still lots of active buyers out there and less competition with sellers. In fact, there were only 7 new listings in July, down 50% from a year ago. Now, one might think that with the big drop in listings, we'd still be having this feeding frenzy like we did a year ago, but demand has also dropped, so our supply of homes has actually gone up a little. Many believe that we've kind of reached the peak of the rapidly appreciating market, and we don't expect to see a drop in home values in the immediate future, but we all have to wait and see how inflation and higher interest continues to affect the real estate market. Now in July, we had 29 homes for sale in Lomita. Of those 29 homes, 8 sold, and we had another 3 pending. Those 8 that sold range from this 2-bedroom, 1-bath, 833 square foot condo that sold for $400,000 to this 2,322 square foot, 3-bedroom and 2-bath home on a 7,665 square foot lot that sold for $1,220,000. Now, of those 8 homes that sold, 4 went for over asking price, 3 went for less than asking price, and 1 sold right at asking price. To get an idea where things are headed, we can look at the health of the market with a comparison of supply versus demand. We measure that with inventory months of supply, which is up a little at 2.4 months supply from 2.3 months in June. But it's up 100% from 1.2 months a year ago. So that means if no other homes came on the market, we would sell out of homes in about 11 weeks. Houses are still selling fast, showing that buyer demand is still outstripping supply, with average days on market at 10 days, with half those homes selling in less than 6 days. Now, I mentioned at the beginning about the changing market and what that might mean for you. We do expect the market to soften a little, as less demand will push homes to sit a little longer on the market, and we as realtors have to educate our sellers on how to accurately price their homes for this changing market. We also believe that presenting a home at its best will become more important to stand out in the marketplace. Now, something you may not have considered is that rising inflation is actually a good reason to buy a home. A home purchase shields and stabilizes your largest monthly cost, your housing cost, against inflation. Rents will continue to rise with inflation, whereas home mortgages will remain the same and build equity over time. Real estate economists believe that appreciation will grow at about 3 to 4% over the next couple of years if we continue with the recession. Now, those numbers represent the entire U.S. We believe locally appreciation will be more in the 5 to 6% range. But that's still way down from the 15% we've had and the 8% that we think we're going to have for the rest of this year. Now, for those of waiting for a deal, we don't expect a bubble like many people are talking about, because there's still a housing shortage in the South Bay. We can see that with our supply levels, are much lower than previous bubbles, which should, at least in the near term, keep home prices going up or remaining stable. We also believe that demand will stay strong, as the largest segment of our population, the millennials and older Gen Zs, are in their peak home buying years. We'll have to wait and see current rates of inflation, if they're here for the long term, or if they start to cool as the economy slows down a little bit. Final thoughts: if you're looking to buy a home, I would still recommend you do so, even at the higher interest rates, because we have no reason to believe that home prices will stop appreciating. Remember, home values going up are only a problem when you're trying to buy. Once you own it, it's a gift. For questions on the market, how to prepare a home for sale, or financial help to purchase a home, or really any real estate question, contact me so I can help. Bye for now.